Good evening, everyone. Time for another silver update. This is the daily chart of Apple provided by netdania.com. We had a very large down day today, and it just seemed to fall with no bottom. Closed on the low, so we're expecting to see more selling tomorrow. As I pointed out last time, I thought this was a dead cat bounce. I still think it is. These lines are actually drawn all the way out from the monthly. So there's your main trend line we need to correct back to. It's going to yield a price if we get there quickly of about $500. But very ominous is this crossing of the monthly from a very high, nearly 100 on the MACD. So there's a long way to fall for this stock, and it's, in my opinion, the selling is not anywhere even begun yet in this stock. But and that gets to one of the issues I wanted to talk about. It's come up a couple of times. Last night we had Lindsey Williams on one of the radio interviews, and he's making the rounds again, making predictions. Someone came onto my blog and pointed out, I believe, that Jim Willey had cited me as a source for $75 silver, something like that. I don't know if it's true or not. But I just wanted to point out about making predictions. My predictions are based more on charts than they're based on sources, because I don't have any sources. So I'm looking at the same things you're looking at. And today I did take a position in shorting Priceline. I do believe that this stock is going to collapse, similar to Apple. In fact, I think it's going to fall in sympathy with Apple. And I may be wrong, just made a little bet. You can see the MACD is actually rounding up, so this one could go up to 1,000, who knows. Maybe I'm wrong, maybe I'm right. But generally, these types of patterns tend to resolve to the downside, especially bubble patterns. That's what we've seen in the past. Is that predicting the future? Not really. It's more sort of an inductive type of prediction based on what's happened in the past. Now, predictions based on sources, where you're talking about people like Lindsey Williams, who supposedly has inside sources, and or Jim Willey, I believe, has a lot of sources, European bankers, etc. These predictions may or may not come true, obviously, because, first of all, these sources may or may not have true information. And even more importantly, if these sources do have true information, the information that these sources have is going to be what they intend to do, or the people that they are connected with intend to do. And of course, we know, as I pointed out before, that God is the only one who knows the future, and statements about what's going to happen in the future based on your plans are really just a form of arrogance. And we know what markets and future events tend to do to those types of predictions. So it's not surprising at all that people who have sources, who are insiders, get predictions wrong. I tend to read Jim Willey for his analysis, and I listen to Lindsey Williams to see how things shake out based upon those predictions. I don't put a lot of stock in the predictions that insiders make, because even if they fully intend to carry out their plans that they intend to carry out may be thwarted by something that's beyond their control. So, and we're going to address that when we take a look at the questions of the night. When we look at Argentina, the silver chart is kind of sideways. It rolled over a little bit like I was expecting it to, but it doesn't look like it's made quite a bottom yet, although the MACD is oversold. So we'll look at that when we get some more information at the end of the week. So let's go to the questions here. Digital currency. This is from BVBLY62. And I guess that's Dear Brother John F., thank you for all you do. I see the collapse of the dollar as a crisis perfectly orchestrated to help usher in a completely new digital currency. A digital currency being the best way for the powers that be to control society completely and continue the fiat fractional reserve banking scheme. Therefore, isn't there a risk in holding PMs if we hear news that a possible new digital currency is going to be rolled out? Should that new currency be digital in nature, the liquidation of PMs, liquidation of PMs in a digital currency would throw up all kinds of unwanted attention from the powers that be. Would it not be better for a stacker in the midst of a massive PM run to liquidate just prior to the complete collapse, pay off dollar debt, pennies on the dollar, as opposed to holding and being totally at risk for whatever scheme the powers that be decide to foist on the PM stackers once people begin to turn in fiat for PM driving the massive spike in price? It would seem logical that the powers that be will seek again to regain that lost fiat by punishing those that sought safety, as Argentina is doing right now. Thoughts? So, again, that's a lot of speculation about what they could do. I don't think that they're going to do something that would punish them if they're in gold and silver stacking, and that was kind of the case. I believe there were some exclusions in the 33 gold seizure or forced buying of it, at least. But it's anyone's guess as to what they will do. But that same argument could be made for dollars. If you had $100 million spread out amongst various banks, so you didn't go above the FDIC limit, and you tried to diversify in that, well, they could just simply seize that. So they really can just seize anything they want ultimately, and I really don't see a difference between the two. Generally, their plans tend to backfire on them just because their plans, and we'll see this when we look at the debt ceiling and the fiscal cliff, their plans just really don't have any understanding of unintended consequences. And we'll read briefly from a story from Business Week about Argentina's international trade disaster. This is just a little microcosm, anecdotal information from what they tried to do there and why it's such a disaster. I'll read a little bit of this. Enrique Español is the third generation owner of Bicicletas Enrique, a family business in the central city of Cordoba. He's 51, compact, accessorizes with a scarf draped over with V-neck sweater, and sounds like a disappointed drug rehab counselor when he talks about Argentina's economy. Quote, "There are times when you don't believe in it," he says. "Then in a year, 2 years, you begin to believe again, to think this isn't so bad. Then something happens again and you fall again." In 1998, Español sold 35,000 bicycles. In 2001, as Argentina defaulted on $95 billion in bonds and went through 4 presidents in 4 weeks, sales fell to 300 per month. So he went from roughly 35,000, he went down 90% or so. Over the following decade, business recovered. By 2011, bike sales were booming again, back up to 36,000 and looking to go a lot higher. Español expected a breakout year in 2012, so he decided to add a wing to his factory. Last year, his business took out a 1.4 million peso government loan, then worth about 325,000, now about 290,000, and kicked in 600,000 pesos of his own to prepare for the coming boom. Last November, he placed an $80,000 parts order with Shimano, the Japanese bike components maker, to be delivered in May. Timing was important because he needed the parts to manufacture bikes for the Dia del Niño, the Day of the Child, in August, a huge bike-giving holiday. In mid-September, Español leads a visitor toward a new 24,000 square foot wing. Bursts of high decibel power tools erupt as workers put the final touches on the factory. "It's almost done," Español says, stepping into the empty warehouse. When asked when he plans to inaugurate the building, he laughs. "No, this gets closed up." He's planning to finish it and lock the door. "We began construction assuming we would sell 5,000 bikes a month," he says, "and the way I am now, I'm not going to reach 3,000. Español says he was blindsided by Fernandez, and there she is, the socialist, totalitarian, government central planner, just disaster, was blindsided by Fernandez's import controls When he applied to bring in the Shimano-made parts earlier this year, he was denied without explanation. What do you say to the Japanese, he says, his voice rising. They couldn't understand. You made an agreement. Yes, but now they won't let me bring it in. But we've already began production. It's a scenario repeated across Argentina as the hurriedly planned system strains under the sheer number of requests. Important capital goods and supplies have been blocked while frivolous items pass. Import permits remain a crapshoot. For every jar of male mustard that gets through, a box of refrigerator parts is stuck in a foreign port awaiting permits. There doesn't seem to be a criteria, etc., and on it goes. So there's the disaster that central planners have made of the Argentine economy. And of course, we have these same disastrous central planners in the United States, and they're planning on wreaking havoc on the economy of the United States. So next question, inflation in US dollar versus NOK. Hi, Brother John. I started to stack up silver and buy the Norwegian kroner, the NOK. The Norwegian economy is strong as ever before. There's little effect on the Norwegian economy other than a strong NOK, which is bad for stacking up silver and gold as this is denominated in US dollars. When the US dollars inflate/hyperinflate, how do you think this will play out with smaller currencies with a strong one? Economy. Investors are recognizing the solid state of the Norwegian economy, and when things are looking bad in Europe, especially investors seek to place money in Norway, resulting in a stronger currency. It's still a fiat currency, but how do you see this play out? Norway's in a pretty unique situation. Well, if you remember, Switzerland was in a pretty unique situation. There were a lot of investors flocking out of the euro disaster, putting their money in Switzerland, and of course then the government of Switzerland pegged their currency to the euro, and we have the explosion of central bank balance sheets. We're going to look at that in a little bit, but so you never know when the government's going to come out and peg it, change the policy, and so if money starts flooding into Norway, you can bet that the government's going to do something about it, and it's not going to be good for investors. And last question, semi-numismatics at Perth Mint. Dear Brother John F., I'm a regular listener to your wonderful podcast. Thank you for the great service you provide to us across the globe. I often see that you recommend semi-numismatic coins from the Perth Mint for a play as both bullion coin as well as coin of limited mintage. You may be interested in the proposal by Perth Mint to remint old coins, thereby devaluing their aftermarket value. While this is limited to kookaburras, there's no guarantee that in the future this may be extended to other series. I would value your response to this new policy, and if you believe the Perth Mint coin should now be regarded as pure bullion like the ASE or Maple and no longer have a semi-numismatic value. Best regards. No, I don't agree with that, and you can click on these links and go see the policy. Policy so far with Perth is that the coins that had a maximum issue announced that weren't minted up to that issue would they could come back in and fill those in. There were some early kooks that didn't fill that out. Now, I think that the popular ones that I have, like the Tigers and a lot of the modern ones, those have already filled their allotment, and Perth has said that they're not going to do more. I think they'll ultimately meet demand. There's no reason why they can't meet demand with their new issues that they're putting out. They're always putting out new issues. So I think that Perth is probably would be fighting against themselves to not keep a limit on their numismatic coins. They can always make new ones in the future. I'm really not too worried about it. So let's look briefly at this fiscal cliff debt ceiling debate. I got a couple of charts I want you to look at. The first one here is a chart from Cluster Stock. This is a United States debt ceiling chart, and you can see the dark blue is the debt ceiling. We got this gray that is the GDP, and what's interesting about this is you can see that peak in the GDP. Now, that doesn't really mean a lot to me because the GDP number in the United States is just such a ridiculously absurd number. They count strange things, like I would not count anything that has to do with a medicine or anything else in the GDP, but they count all kinds of crazy stuff in the GDP, so we don't even know what the GDP is. But the reported GDP that they're giving us has flatlined all the way back from this point, well, maybe about 9 trillion. You can see we're up a good 6 trillion from there, and GDP's gone nowhere, even according to their bogus numbers. So it appears that we've reached that saturation point where more debt simply doesn't buy more GDP. That's not surprising when you're reaching the endpoint. That's clearly going to be a hockey stick. And the other one here is the U.S. debt limit. This was on Jesse's site as well. It's from ShareLinks. But this is U.S. debt limit versus gold. And you can see you got three lines here, or three a chart and some indicators here. The stair-stepping one here is the U.S. debt limit, and that's when they make that legal change. And the red line is the actual U.S. debt. You can see that it always just kind of meets up to that legal limit and then surpasses it. Now this is a little bit dated because we're talking around the 16 trillion number now. And then the gold price is on there as well. So you can see gold just follows the debt up. Not surprising. But so we now have another fiscal cliff negotiation, and they always end the same way. There's only one end to these negotiations, and that's to kick the can down the road. So to understand what they're threatening, if to put it in a simple way, they're threatening that if you don't raise taxes, we'll stop borrowing money. Now, that doesn't really make a lot of sense. Why don't you stop borrowing money and start cutting spending? But of course, the fiscal cliff is they tell you that if they actually have to cut any spending, the economy will collapse. So it's pretty obvious that they intend to kick the can down the road again. My guess is they don't want to face this again. Geithner's out stumping to try to just remove this legal limit completely, so they can just let the debt rise as high as they want it to go and print up as much money as they need to print to keep things going. And that's going to get us to the last chart, series of charts, and the last point of this, and that's going to be the inflation and increase in the balance sheets of the central banks. This is from Cumberland Advisors, and this is total assets of major central banks. Now, I brought this up because I had a comment on one of the YouTube videos where a commenter made the statement that you're always quoting Eric Sprott. Eric Sprott's always quoting the one-for-one dollars flowing into gold and silver, but you're only talking about gold and silver eagles, and that's no basis to make any comparison. Gold is going up, but central banks buy gold. Central banks aren't interested and aren't buying any silver. So I wanted to do a little math on this. My answer on the comments was the reason why central banks don't buy silver is because central banks can't buy silver, and that's because the price of silver is way, way too low for any of the central banks to buy any silver. They would simply put the price up on themselves so high that it would explode. So this is the G4. You can see this. It's a pretty handy number here that we're approaching. You can see it's the Federal Reserve, the Bank of England, the ECB, the Bank of Japan, and the Swiss National Bank. So these are the assets of these major central banks. You can see they're right there at that 10 trillion point. And so it doesn't take much math. We can just use a simple calculator and bring up our number of 10 trillion. There's 10 trillion. So let's just say that for some reason they got panicky and scared and decided they did want to put 1% of their balance sheet into physical silver, not paper silver, but physical silver. Supposedly they hold physical gold. I have my doubts, but let's say it's physical silver. So we're going to multiply that times 0.01, and that's going to give us our 1% of what they have. You can see that's $100 billion is 1%. So if they did that, we're going to have to divide by 33. We'll just say that's our price. We're close enough to that. And that yields right there 303030303030. 3 billion ounces of silver is 1% of central bank balance sheets. That's what it would take of physical silver for them to keep 1% of their assets in silver. That would be approximately 4 years mining supply at 750 million ounces. That means that for 4 years straight, they would have to take all of the silver that's mined in the entire world, none for industry, none for investors, all of it to the central banks, and then they would have 1% of their balance sheet represented by silver. So you can see clearly it's impossible. The price of silver is way, way too low for any of these big players to buy it. Now, these charts in here are absolutely fascinating. You can see the quality of the central bank's balance sheets, and it's just kind of some bizarre scenario here. You can see the names of the assets on here. The big one we've got since 2008 is this blue here, and that is other credit extensions. And this big one up top here is mortgage-backed security. So there's the toxic trash that's in the Fed's balance sheet. And then we have other Federal Reserve assets right here. So the big ones are going to be other, and mortgage trash paper. If we get our definitions here, and you can read through, this is a fascinating series of charts of how the central banks are blowing up their balance sheets, and you can see how much they've increased that. But you can look in these and get some definitions. Let's take a look at this big one here, other credit extensions. So it's very curious as to what other credit extensions are, and other credit extensions are emergency credit extended by a Federal Reserve Bank under exigent circumstances to an individual, partnership, or corporation that has been approved by the Board of Governors. This would include AIG. But when you go back up, AIG has its own category. So who knows? And that's their assets, a gigantic paper Ponzi scheme. And of course, here's their, that's their assets. And here's their liabilities. Again, gigantic paper Ponzi scheme. Reserve balances, that's the vast bulk of their liabilities, and we can see they define that as, they don't have, here it is at the very bottom, reserve balances, deposits of banks with the Federal Reserve. So obviously a gigantic game of musical chairs. The Fed is buying paper from the banks. The banks are depositing the paper with the Fed. The Fed is increasing the paper they're buying. The banks are borrowing back, selling it. It's ridiculous to the point of absurdity what they're doing. So the fiscal cliff debate is a joke. They're going to kick the can down the road, and they're going to continue to print money until they can't print any more. And is it going to result in a international digital currency? I don't know. Only God knows that. But my bet is no, that China is probably in the process of stacking physical gold and silver, and they're probably going to vote no. And they're going to vote that no, we'd like to have the world reserve currency for a while, and you're just going to have to wait on your world currency. And we'll talk to you next time.